General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock the workout. Which models hit? Wasn't really a hit model week. It's Monday. Not really a New York reversal. It's not a Wednesday midweek reversal either. The Monday, Tuesday, Wednesday is textbook trading. Thursday, expect chop before NFP on Friday, but you do not trade. So the model that hit is actually the NFP protocol rule, where you can take bread and butter setups Monday through Wednesday, and Thursday you expect chop. Friday NFP. That old ICT rule played out perfectly. Identity, progress, discipline, patience. These narrow range weeks with high volatility has just been used as a training ground before Q2 starts. Case study. Just nothing stands out. With this war stuff, I think every example is so specific with the economic and geopolitical stuff going on. example so specific with the economic wouldn't be helpful as a template. On the flip side, I think when you backtest and stuff, it'd be that same type of price action. You don't know how it felt to be trading in 1994 if you wasn't there or whatever. So you will see, like, how tight moves and stuff. Like, oh, this buy or this sell. Like, oh, this did this and this did that. But you don't know. People sitting here waiting on tweets, looking at oil, Bitcoin, all kind of stuff is going on that made this picture. So just back testing old data, you ain't gonna have them feelings. All you have is just the candles. Interesting though. Experience earned this week. Picking and choosing shots. Next week, improvement focus. Holding my runners and options. Let's get the PO3 charts. Well, okay. Lead to. Week 1 vibes. Previous month vibes. Hold on. It's a little bit backwards. First week of March, rent due. War going on. Inside week. Where did we accumulate? That's the only thing that really stands out. Took the low here. Then took the high here. And it was just a large range. We swept both sides of that range. Just consolidated in it. Very uneventful week. Biggest takeaway is NFP did not get us out this range. always works. If CPI don't get us out this range, then it's in the war range. Even before it was the tariff range. It's the same range. We just renaming the range. Lord. Right. This is interesting because we didn't get this Monday high. But we still in this previous month's range. February sucked. Big week, inside week, inside week, inside week. These swings are wider, but it's still like seek and destroy, reversion to the mean, not really making any progress. And we're below 2026 open price. So seasonality's lining up. They came back. Where did they fill the bag? They filled it here, really. So we gap down. What happens up in here? It's like, all right. Then this was the drawn liquidity, which was previous month's low, and we left these equal lows. So this is how I have to visualize it. We created this range. Let's try this. Ran this liquidity here. We're getting like propulsion block vibes, etc., etc. The gap down, ran by stops, reacted here, swept this low, then we started short squeezing. We kind of just consolidated the rest of this week because it's Monday, Tuesday, Wednesday, good price action. We're not interested, but this is when we really started just liquidating. It's also interesting how we're coming back to 2026 open price. News, bad news, bad news. Power of 3. First weeks. Range. happened here. Even after we unloaded at Tuesday low, we came right back. Narrow range weeks to start this year have been historic. Haven't seen ranges this narrow since I think it was like 1896. And today is 3.7. All right, that's it on that. Y'all have a good day. Peace.